Hi guys, this is Michael from Nomadic Insights. In today's video, we're going to be taking a look at Endeavor Holdings, which is going to be going public this week, and just looking at whether or not this company is going to be a good investment. So Endeavor Holdings owns a number of different properties. The jewel in the crown of Endeavor is UFC fighting. For those of you who are not 27-year-old guys, you may not be familiar with UFC, but UFC is the main mixed martial arts fighting association. They're really the monopoly player in town. They are the WWE of MMA. So MMA has seen an incredible renaissance under the ownership of Ari Emanuel since he reinvested and helped a group of investors buy UFC. That brand is really what I see as the jewel in the crown of Endeavor Holdings. Now, with that in mind, Endeavor actually owns a series of other businesses that account for 60% of its revenue overall, which are its events promotion and talent agency businesses. So I'm going to get into that a little bit more, but I do want to cover the executive leadership team first and some of the, how shall I say, things that I find not so savory about Endeavor. I mean, I like UFC. Personally, I think it's a really good watching experience, way better than NFL. Way, like, it's freaking dope. Is the best way is the best way to describe it. So that being said, uh, Ari Emanuel is the brother of former White House Chief of Staff Rahm Emanuel and is an insider in Hollywood and previously owned a still owns a very successful agency, which is really the bedrock of Endeavor Holdings and led that through a series of mergers. Now, Ari and his partner have continued to execute and build their business over the last 12 years. And one of the things that I don't like about this particular IPO is the egregious clinging to power by the current executive leadership team. So just because this is an IPO doesn't mean the public is going to get ownership of the stock. So what this means is this IPO actually comes with 5 different categories of shares. So Class A just gets 1 vote, but current investors are going to have their shares converted into a Class Y, which gives them the equivalent of 20 votes per share, effectively allowing Ari and his partner, as well as the current investors, to still wield over 51% control of a public company. Now, no. If you're getting my money, I'm getting control. That's very simple to me. And this continues a trend of tech investment where, these newspaper businesses, which are, how shall we say, you know, very, very full of nepotism. I don't see why businesses should continue in families forever and forever and forever. Now, the Waltons control their business because they still own most of the shares. But gradually over time, the family is going to lose control over the company. It's going to go to be a public company like it should be. But these agency and talent businesses, I have a really big problem with that from an investment perspective, where you have 5 different kinds of common stock, and Class A and Class Y have radically different voting positions. That just seems crazy to me. And if you're in your 60s, you're getting ready to retire, you should be ready to relinquish control of the company. This seems to be an exit strategy where they have a business they've built through most of their professional careers, and I understand not wanting your business to be ruined, but 20 times just for current investors, when you're trying to get access to public investment capital, I'm not really sold on that. So from that perspective, the current Endeavor Holdings IPO does leave a sour taste in my mouth because it's not really that outsiders or fans are going to run the business into the ground. It's just about giving up control. And transition of leadership is really important to a company. So over the long term, this company with executive compensation, they're not really going to be following the same rules of independent directors. Now, boards of directors are, you know, not really doing their job to control executive compensation to begin with, but why do founders deserve such centralized control over their business? So, yeah, I have trouble with that, even as somebody who wants to found my own business. The idea that I'm going to take somebody's money and effectively still mean, and they get no control and they're just handing over their money and I get to do what I want with that money. Well, that's a pretty good deal to me as somebody who wants to start a business. And I'm not necessarily sure though that's a good investment. That's just my thinking. So another issue I have with the UFC is if you're in the talent representation business and you're a member of a union yourself, I believe one of them is in the academy, which is an actors union. Well, let's just talk about that for a second. So if you're in a union, none of these UFC fighters are in a union. These guys are forced to comply with doping protocols. They have to wear the uniforms that are issued to them. They're not independent contractors. And they're the entire business. So just like the WWE, John Oliver, I'll link that piece in the description. He does a pretty interesting expose of what happens to these athletes, without unionization, and there's a disproportionate power imbalance between the promoter and these athletes, especially within mixed martial arts, where UFC owns the octagon. They license it to Bellator mostly for the good of the sport. That's all hunky dory, but that's discretionary. And these promotions, while capital intensive, the idea that somehow these people are independent contractors is fanciful. It really is. I mean, it's kind of comical. But you have the brother of Rahm Emanuel, who's the chief of staff for Barack Obama, who's a registered Democrat. So I would understand the McMahons, who are running for Republican, to not allow their people to be unionized. I get that. That's ideologically and philosophically consistent. But for Endeavor Holdings, your brother's Rahm Emanuel. I'm sorry, the politics are going to inevitably come into this. It doesn't work for me. It really just does not work for me. So there's 30% of the business, which I consider to be the business to invest in, because a talent agency it's just not something I would personally put my money into. It really is UFC, but UFC account and the own sports franchises account for less than 30%. They account for approximately 30% of the company's revenue. So it's just the level of control of the agency. If this was just the agency, where you want to retain control over your talent agency, just have a partnership and just have the partners. But yeah, from an investment perspective, I think people think they're investing in UFC when they're really investing in kind of this weird amalgamation of, also they now own the Miss Universe pageant. So, beauty pageants I have problems with to begin with as well. I think they're kind of pointless at this point. So this is kind of like the John Oliver mocks it investment. And I do own AT&T stock because I think it's hilarious that John Oliver works for me. That's why I own like 150 shares in AT&T. I'll be buying more. But again, I just don't see this as a good, investor-friendly investment. I think you can make money here because UFC is a really good show, but you're not going to have any control over your investment. You're not going to really be able to influence the policy of the company. And I think that that does matter. So, again, from a due dil perspective, from a research perspective, I can't really, just doing the soft due diligence. I mean, there are losses within the company, revenue has decreased obviously because of COVID. So there's a lot of risks with this company. But the biggest risk from a philosophical point of view to me is that the CEO is not going to just retire and give up control. Like inevitably, Bill Gates left, and since Steve Ballmer's been out of there, holy hell has Microsoft done a great job under new management. You need fresh blood in these companies, and UFC does need fresh blood. It needs new leadership, it needs new innovation, and I just don't see where that's going to come from, guys. So again, thanks so much for watching Nomadic Insights. If you like our content, we do Skeptic Sunday from 6 to 8 p.m. EST, where we're talking about different stocks, different hot issues, and different investment topics. I hope you'll join us. Thanks so much, guys. Stay great.